Welcome everyone to the CoinRock Show. Welcome to it is Tuesday and the markets are green. Can you imagine that? The markets are green. Are we back? Are we back? That is the question. I think that most of you guys know that it's been, if you've been opening your apps, your portfolios, it's been a difficult past few days over the last week. Billions of dollars in some of the biggest coins. So billions of dollars for some of the top, 10, 20, 30 projects have dropped. So it has been a difficult start of Q2, but we are back. I've been fighting a cold for the last 10 days, and now we're back. Today we're going to have a look at the news, and we have a very special guest today joining, Mr. William Quigley, who is the co-founder of Tether. And so we're going to have a cool conversation about all things Tether, also WAX, a new project that he is the co-founder of. And there's a few questions, and just like how we do these CoinRock shows, very cool conversations. So that being said, I've had a cold for the last maybe more than a cold. I mean, I've had like a mad fever. Like early last week, I told the team we have to. I can't live stream. I mean, I live streamed. I think we streamed last Monday. So what was it 8 days ago? Or Tuesday, 8 days ago, and that was okay. And then the next morning, I woke up and like, oh my god, my head was exploding. So welcome everyone. Let's push this out to the world. Let's. I'm gonna push this to the groups. Please share this. I know the market is completely dead. I know that. But let's try and get the word out. Let's help people who are on and who are interested in crypto, who are staying interested in crypto, because the whole point here is when we, let me just have a look here. I definitely want to, whoops, what's this? Yeah, I want to mention William here on the push. So let's just close this. And William will be coming on in about 30 minutes. So let's push this out to the world. It's going to be a kind of a ramp up over the coming half hour, just talking about some of the news. And just take it easy, honestly. I still have a fever today. I'm not feeling great, to be honest, but we committed to this. My commitment to the CoinRock Show is when we have these shows booked, we have to get them done, right? Especially when we have guests. And I think especially, when we have guests, that's one thing. I hate canceling on guests, because and the same way that I don't like when people cancel last minute, because you make arrangements, you play around with your schedule, so it's not easy to, especially when you're in different time zones. So barring medical emergencies, I usually always show up for these guest shows. Sometimes when it's just like me streaming, last week I had to take several days off, but when we have guests, it's I'm old school. It's a sign of respect when someone comes on, or when I go on. It's cool to again, there can be emergencies, but it's cool to actually go through and follow through with what was planned. So let's push this out to the world. All right. Let's give it a few. I don't know if Caius is on. Caius, my co-founder at CoinRock. Lucas is he's we're on all day on different calls. A lot of cooking going on at CoinRock. So it's been a very eventful. You know what's interesting with the whole crypto market is it's been down only for the last few months. Not that we weren't prepped, not that we weren't. Well, I mean, nothing surprising, right, for us, because we talked about this. Let me actually put you guys on the top screen here so I can look at the comments and read them here. There you go. So welcome everyone. There you go. I can now see you guys. I can read. Welcome Mark. Welcome Zach. Say hi in the box. So we have a very special guest joining in about 30 minutes. I'm actually going to send the team the link here so that William can join. So team is watching too. And we'll be going. You can tell William will get going in about, let's say about half an hour. Okay. All right. So in the meantime, just typing this to the team. Okay. Welcome. So we have Kobe. I know a lot of you guys are listening into on the audio. So, you know, we did a Spaces. When was it? Was it last? I think it was last weekend. We do so many of these streams and shows. I think it was. Was it last weekend? I think it was Saturday evening, with Lucas and we've done so many. I think, you know, the team told me that we were at episode like 25 or 30 now. And so by the end of the year, we'll be at, I don't know, well over 100, which is pretty cool. I mean, we started CoinRock Media about less than 2 months ago. So very cool to see this growth, and also just like the response. So thank you for joining the show. You know, we try to do about 2 guest shows a week. Last week is the one, like I was in bed last week on calls. It was a difficult week because we did the Monday show last week, and then I was like, okay, I think I need to, and I hate taking days off. Not that I hate taking days off, but I like being active, and so, you know, I'm usually, most of the time I'll be responsive, right? I'll be available on one of the apps. And so during the week, the team was like, hey, I think, you know, it's okay if you want to rest up, you know, by the way, because we have really good operations. I mean, great people on the teams. So I mean, it's fine if I don't show up for a few days, right? And I was actually planning on taking a few days off last week, because we joke about this, but, you know, at the same, as much as we joke about it, it's almost not funny that we've been working for well over a year. So I'm looking at my April 8th now. So since early Q1, a year and 3 months ago now, I don't think I've taken a single day off. I mean, I know I haven't taken a single day off, but I don't think I've taken a day off without responding to either being on calls or being, you know, on Telegram or WhatsApp. So not that I'm bragging about it, because I loved my pre-crypto life. For those who just joined, I actually retired in 2020 from Web2. For about 18 months after selling several of my businesses in 2020, I didn't do much. I played video games. We went hiking with my wife. We just traveled a lot. So, you know, I've put in the work over the last, well, since going full-time in entrepreneurship since 2007. So I've put in my time. I was like, okay, in 2020 during COVID, I sold several of my online Web2 businesses, and I was like, I'm done. Thank you. I've put in the work. I've put in the sleepless nights, and it's time for me to chill. And so I did chill. For years, I actually didn't play video games. Not that I had anything against video games. I know there's this kind of, some of the online quote gurus like to demonize video games, like, oh, it's the devil. It's like, no, bro, it's fine. It's just like anything, you just have to manage it, right? Playing video games 23 hours a day is bad, but playing an hour or half an hour a day is fine. but I just, I'm a big Zelda fan, and I skipped several of the Zelda games for about 10 years. And during so after COVID, during/after COVID, I was like, you know what, I'm gonna go through all the Zelda games and finish them all. So favorite one, of course, Ocarina of Time. And since then, I just went through and played pretty much 18 months of. It was fun. It was off, and then had the idea a bit less than two years ago, about a year and a half ago, to actually start building in Web3. Big opportunity. I mean, it's one of those markets that right place, right time, and this was after FTX, meaning there was a big systemic risk to the industry during the whole during the FTX saga, rumors of even fabricated rumors of Binance being at risk too. So it was a difficult time during the bear market. But I remember telling my wife, I said, if this ever comes back, if there is interest from the institutional level, I think I might at some point want to build in Web3. And then we got started about a year and 3 months ago. So January, a year and 15 months ago. And since then, it's been pretty much nonstop. So coming back to last week, I was hoping to take a few days off, and I didn't take any days off. We were on pretty much, the days when you're on all these calls, right? So we have a lot of calls. I don't brag about it. I'm much more productive being left alone, being creative, being just working on a high level strategy, just thinking of systems, thinking of strategy, thinking of ideas. That's where I do the best, and that's the highest leverage for my where I combine my experience, my expertise. I like thinking, and so actually being on calls nonstop is very draining for me. So add to that being having insanely high fever, and having these calls that I have to do, right? I mean, we have teams, people depend on us, and and the leader has to lead. So Kais and I are both pretty much nonstop. Of course, Lucas now fully on with CoinRock and CoinRock Media. It's been very much nonstop. So a lot of things happening. What's interesting internally for us is, as much as the markets have been catastrophic, I mean, this is literally, I mean, I'm sure you've seen the headlines. So we have a few headlines here on CoinRock Media. I can pull them up, but it's been I'm sure you've seen the news. Even my friends who are not at all in crypto have heard about, not even, forget about crypto. This is just a market-wide. There's a few things I want to cover, including, of course, Tether, because we have the co-founder of Tether coming up in about 20 minutes on the show. That's going to be super fun. But yeah, I'm sure that by now everyone has seen this. If you haven't, open your stock portfolio and you'll see what I mean. So this is not just crypto. Remember, we talked about this for months, right? If this is your first cycle, you know that, or now you know that everything is highly correlated to the stock market. If stocks do poorly, it's pretty bad for crypto. I remember last week stocks were plummeting on, was it Thursday or Friday? And one of the bullish headlines I kept seeing on my timeline was oh, crypto is not down that much. I think it was hovering around 83, 84K, with the stock market just cratering. So I guess that's bullish, but overall, you guys know that, of course, when traditional markets trapped by crashes, of course, crypto is also a direct victim to that, to the crash. So you've seen this. Trump tariffs. We talked about this for months now. Did we know? I mean, was it clear that the market would crater as much? I don't think so. Otherwise, everyone would be short. And the truth is, not many were expecting this much of a shit show. So a friend of mine is a CIO in a London hedge fund. He is literally the inventor of the trading system that runs, it's a $2 billion hedge fund in London, actually more than 2 billion. And so he is the chief thinker, the CIO. So he basically comes up with strategies, and then they allocate capital, and then they of course, big risks, because big responsibilities, big risks too. So very, very close friend of mine. And so I talked about him on one of the shows a few months ago. Maybe it was a space, but I said that, yeah, very good friend of mine. So same guy was net short. They were net shorts earlier this year. And, and he's not a lot of big famous shorters are inherently more bearish, just as human beings. It's actually very interesting. This goes back to really like deep psychology. Like, do you see the world as an opportunity and a growth and a place of abundance, or the opposite? So he's very much about positivity, abundance, abundant mindset, but he's also, of course, a very shrewd investor, and extremely, like, he's a financial genius. He understands the intricacies of the macro global debt. He started telling me about this. We met, I believe it was 2017 or 2018, 2017. And since then, we've been extremely close. Came to my wedding. Family level of being close. And so he started telling me a lot about the issues with global debt, corporate debt, 7 years ago. And when most fund managers weren't even looking at that, doesn't mean he was short before. But this year, they actually they started building their short positions late last year. So, of course, big risk, because everything's dependent on Trump, as you know, as we know. We talk about this on every show pretty much here. And so we talked over the weekend. Of course, being net shorts in this environment, they were massively overperforming. So great year. This is literally the most profitable year in the last 7 years for the fund. The most profitable Q1. And I think it says a lot to having, going against the grain, going against the masses, because building a big short position in Q3, Q4 last year, when everyone was super bullish, is contrarian. We kept seeing the headlines, and we talked about these headlines that Trump is bullish for the markets, etc. So going against that, they had pushback from investors, from some of their big investors, and despite that, it takes a lot of not just self-confidence, but self-belief and belief in the systems and that you've built, and in the data that you have found, and that you have been using to build your systems. It takes a lot. So there's one thing about having a theory online, and building a net short position with multiple 9 figures on the line. There's a big difference here, right? And so and we share a lot with each other. He really got into the world of Web 2 e-commerce, and thinking more on the consumer side, more on the web side, through my experiences, and me sharing that with him. And I have access to his brain, basically, for all these big macro scenarios. And so, me being very cautious. Remember, I've been cautious for months here. This is not new. Me being cautious earlier this year is also from listening and being open-minded, and listening to some of the smartest guys around me, who have huge amounts of money on the line here. And you guys know, because I've been saying this. I've been saying for months now, short-term bearish. Now we need to define what short-term is. I think one thing that's interesting is, and even he was surprised, they, of course, believed that there was a big short opportunity in the markets. but he himself is surprised by the reaction. So they weren't expecting to do so well. And there's a very famous saying in finance. It's stairs up, right? Stairs up, and then elevator down. And so it doesn't take, because the markets panic so much, it doesn't take much in the right scenario for markets to come cratering. And that's what we've been seeing. And so then the question is, how long is this going to last? First of all, no one knows. Everyone around me, and this is like outside of crypto, right? Forget crypto. Like crypto is a very small bubble, right? I think that it would be a big mistake to only look at crypto and Bitcoin and the amount of holders and whales and all that, because ultimately crypto is a small boat on a very rough sea, relative, right? Nothing compared to the size of other big TradFi markets. And so this, just the conversations that we've been having internally at CoinRock, or me with my TradFi friends, this could last for months. This uncertainty. We talked about the flip-flopping. This started in February. Remember, with Trump saying, "Oh, we're gonna," I think it was Mexico and Canada initially, right? We talked about this on the show. He mentioned tariffs, and then a few days later, he backtracked. And so the markets shot up again. And now it's April, right? Second week of April, and we're still doing this. I think the market now is understanding that, oh shit, he's serious. I think there was a lot of that, that's something too that I talked about with my friends. I think the market thought that he was bluffing, and it was like, we know Trump. He's just a talker, right? He'll throw, a few threats here and there, but then implementing them, never going to happen. And so, yeah, he is actually. I think that, not I think, my friend says that there was this almost expectation that he would not follow through, and I think everyone is surprised. Even some of the big, quote, famous fund managers, you see them online, right, crashing out and tagging Trump on Twitter and saying, like, what are you doing? This is like bearish, etc. It's like, yeah, he's been talking about tariffs for years. And so I think now what's happening is the market is realizing that, oh, this is not a few days. At best, a few weeks, probably a few months. So then the question is, do we see a big V-shaped recovery like we did during COVID, right? During COVID. And the answer is most likely not. We're going to see some relief bounces, of course. We're seeing one today. Guess what Bitcoin was at 77, now we're at 80K, everything's green. So you look at this, you're like, oh my God, we're back. But it's like, well, I don't know, ETH is at 1500. Are we back? It's not looking like we're back. Remember, I talked about this months ago. I said that we'll have these choppy, right? We're in this kind of seesaw time period. This is going to happen until the underlying catalysts that affect TradFi and directly affect crypto are solved. Being number one, of course, this is all the macro, and there's a lot of people that know a lot more about the macro than me. And I think when you look at only crypto, it's very easy to have tunnel vision. And I think it's a big mistake. I talked about this too for years now. Crypto always wants to believe that it's the answer to everything. And I think it has, of course, huge benefits, huge potential, promise. But it's always today. It is, and it is still, of course, very dependent on what's happening on the macro at a macro level. And the macro level is, again, the big ideas, right? The big concepts. Number one, tariffs, of course, but it's not just the tariffs. All right, we talked about, let's see. So Bitcoin dropped to 77K, blanket 10% tariff. And then, of course, you have a lot of people who are like, even some of the big names in finance, oh, this is good, this is bad, this is why it's good, this is why it's bad. So a lot of fear. And I mean, yeah, this was, when was this? A few days ago? This was yesterday. I mean, how can crypto do well when you see this? Again, we might see some relief bounces. This is actually a really good account, Kabaisi letter. Very recommended. I don't know the guy, but they have some really interesting research. Very reactive to the market too. So yeah, it's we're going to see a lot of this. We'll see a lot of green too. Things will shoot back up. Now, coming back to what I was saying about the macro, and welcome to everyone who just joined. Welcome to the CoinRock Show. We have William Quigley, who is the co-founder of Tether, who will be joining in about 10 minutes. And that's going to be, so team, if you can ping me when William is good. I'm actually very excited because it's going to be a really good conversation with William. And let me just have a look here. So again, are we gonna, are we expecting a V-shaped recovery, bounce back like COVID? Answer is no. I don't see it. And the people around me who've been through COVID on the TradFi side, right, who've gone through this, why? Like, aside from a few relief bounces, COVID was very different. Mainly because we saw massive money printing in the days and weeks that followed the crash. We're not seeing this. It's not happening right now. So there's a, recency bias always, I mean, one of the many cognitive biases. And I highly recommend everyone look into, I mean, you can Google this, the most popular cognitive biases. You'll find this stuff on Wikipedia. It's very interesting to just to understand psychology, your own psychology, but also investor psychology. Everyone's like, oh, market crash like COVID. Oh, well, it's going to rebound like COVID. Well, no, because it was a different time. And so what happened during COVID is, of course, massive money printing. We're not going to get money printing right now. We talked about this too, right? No one's saying that the Fed's going to start printing today. Not happening. This is going to be a slow grind. This is going to be this is going to be painful. A few weeks, probably a few months. Relief bounces, yes. Huge V-shaped recovery, probably not. Because, I mean, unless and until the underlying issues that are showing now and have been showing and have been mentioned for months now get solved. So, you know this, right? The US debt, QT, QE, and interest rates, those are the big things. Those are the big, I'd say the big points here that also show that there's no reason for the Fed today. This is not a systemic risk. Like, there is no reason for the Fed today to start printing the same way they did during COVID. So again, relief bounces, yes. Huge money printing operations, most likely not. I mean, why? Again, like, there is literally no need to do it now. Let's have a look at some of the quick headlines here, and then we'll break for a few minutes, and then we'll get William on. Is there anything really key? Oh yeah, this is one that I wanted to show you guys. So CZ, former Binance CEO, joins Pakistan Crypto Council. Talked about this a lot. I mentioned this. We're going to be seeing a lot of this, a lot of Web3 founders, co-founders, then who will then go into advising governments, and this is super bullish. So despite everything that's happening in crypto, despite everything that's happening in the macro, all the red, the market itself is it's just moving along like bullish headlines. This is a bullish headline. You want to see big co-founders coming in and advising governments. This is good. There's another one that we have, and then we'll break for a few minutes. And then I'm told that William is getting ready, so we'll get William on in a few minutes. This is good too. Nothing really groundbreaking. I mean, UK police collaborate with law firm for crypto recovery. I think it's good when the bad guys get caught. And another headline, again, you know this because we talked about this on the show a lot. The SEC pushing for regulatory, so to come up with this regulatory framework for more clarity for everyone in the industry. This is very bullish. So again, I want to show you guys that despite what's happening in TradFi, which directly affects crypto, I mean, these are good headlines. These are good headlines to get on a daily basis. So despite the fear, you have to stay unemotional. You have to stay unemotional. You have to look at what's happening, what's factually happening in this market. These things are good. And I think this is exactly what we want to see in a growing industry. So that being said, let's break for a few minutes here, and then stay on in about, I'd say we'll break for 3 minutes, and then we will get William on, co-founder of Tether. I'm actually very excited for this conversation because it's gonna be a fun one. We'll be on for about, I say, 55 to 60 minutes. So stay on. We will be back in about 3 minutes. Let me just put the screen. We need to do a few changes here on the back end, and we will be right back. Hey, Matthias here, and if you're enjoying this and want access to even more alpha, early stage deals and opportunities, and also behind the scenes insights on the markets, hit the link in the description and make sure you're subscribed. It's free and it puts you ahead of the curve. Let's get back to the show. So we back. Welcome, William. Can you hear us?
I can. Hopefully you can hear me.
Perfect. Welcome to the show, and we will put you on the big screen. Welcome. Very cool to have you. I'm personally very excited for this conversation because there's a lot we can, and I think the issue is we're going to have so much to talk about that we don't have the time to cover everything. I'm very curious to dive into all things, Tether, of course, but also your experience and your views on the market. So for everyone joining, welcome to William. William is the co-founder of Tether, and I would, the best thing is for you to actually introduce yourself, tell people what you do, what you've done. The floor is yours.
Sure. Well, as respects to crypto, I guess I'd say my original interest in blockchain-based things and crypto, I got led to that from my involvement in the virtual item trading business, video game virtual item trading. My partner and I he actually invented the concept of trading video game virtual items for real money back in the 90s. And that became a really nice business. We ran marketplaces to allow people to do that. For any of your video game audience, I'm sure they're familiar with trading skins. Skins came later. First, it was virtual items, and then skins. Skins are just virtual items with no in-game utility. They're strictly cosmetic. But it was our experience in allowing people to buy and sell video game virtual items that caused us to be interested when Bitcoin came along, because they had similar purposes. A lot of people were using, particularly outside of the US, were using video game virtual items to buy and sell things, because around the world, it's often very hard to get access to payment systems, and particularly in the developing world. So that's what got us interested in it. I initially was skeptical, I got to say, because as a venture capitalist for a long, long time, I had already experienced what you'd call magic internet money in the 90s. And I had played around with a couple of different versions of that, and they didn't work. I didn't realize it at the time that one of the reasons they didn't work is because of the issue of how do you maintain discipline with the supply? Because I wasn't, obviously, no one had thought yet of linking a tradable token to a blockchain. But it took me a while, probably a year and a half, to figure that out. My partner jumped in very early. And then once I figured it out, after he explained to me why this was different than the earlier versions of internet money, we came up with a game plan. It followed very closely what I had done in the early days of the internet. My partners and I created the first consumer internet venture capital fund in the 90s. And what we learned from that experience was picking a sector is really valuable if you pick the right sector. And then you have to have some sort of methodology for how you're going to invest. And for us, it was probably more after the fact, looking backwards. We realized we started at the infrastructure level, then we went to the application level, and then we looked at services and other types of businesses that helped the companies beneath that layer. And so we took the same approach with crypto for various reasons. Blockchain and crypto was a lot more slow in the uptake. We can talk about why, but we covered everything from the literally different blockchains to different consensus mechanisms to apps built on blockchains. We were involved in many different aspects of the crypto space. And now it's been, 13 years. So we've been at a long time.
Is it a case of you seeing the game play out in I wanted to say Web 2, but before actually Web 2, Web 1. I come from I started selling online actually in the early 2000s on eBay. So that's how I got into this whole this online world. I remember going to, I talk about this on the show sometimes, going on Alta Vista, which the majority of people here don't know what Alta Vista is. And so was it a case of you being a part of that wave in the 90s, which I was too young to capitalize on it, and then seeing this kind of new world developing, almost like not a repeat, but for a lack of a better word, a repeat of this is a huge growing market. We've seen this wave in the 90s. I think there's something to do. What was the thought process in you attacking and looking at the market as a whole?
Well, the way you described it, I think, is pretty accurate. I'm a professional investor, so we use methodologies for how we look at the world. Sometimes we overthink. That you pay a high penalty for overthinking in crypto. I'll tell you that. Some of the smartest people in the world never got any exposure to cryptocurrencies because they, frankly, were too smart. So without going into great detail, we always start, my partner and I, and this has just come from decades of investing. I call it, what zip code do I want to be poking around in? Just meaning, what sector is interesting to me? There is a rotation from one sector to another where the markets are either ignoring or uninterested, annoyed with the sector, it's underperformed, and capital flows out of that into the new, more promising sectors. That's just how the world works, right? Right now, we are in kind of max technology sector appreciation. Tech stocks for at least 20 years have been where the majority of the capital is flowing. And before that, it was energy. And then before that, it was consumer products. Before that, it was a lot of staples, the big industrial companies and so forth. And you pick a sector, hopefully because you have a point of view that that sector is going to do, here's the key, a lot better than other people perceive.
Mhm.
And whenever I teach investing to people, I think this particular point is sometimes hard to understand, that it's not whether or not a sector does well, it's whether or not it does better or worse than the expectation, right?
Mhm.
And so that creates some complexity. If we take a look at NVIDIA, so last year it sort of got discovered by a lot of people.
Yep.
People bid it up to being the most valuable company on earth. And at that point, I would say maybe Marchish of last year, it seemed to me that people's expectations of what was going to happen with NVIDIA were, if not wrong, they were fully pricing in optimism. And it was almost the euphoric case.
Yep.
And that's a danger, right? When you're involved in an asset or an investment where the consensus is near perfection, you probably want to sell. And that was my recommendation last year with NVIDIA, which is interesting because it is, of course, continued to grow well. It continues to generate greater and greater earnings, but it's not doing as well as what the expectation was for it to do. And so the same can be applied to any sector. I would say when it came to crypto, I was delighted once I got over my initial reservations because, as I said, I had seen attempts at magic internet money in the 90s and they didn't work. And all investors, after some period of time, get scar tissue from things they've done. And it can help you avoid stuff that maybe you should just not spend any more time on, but it can also be a curse.
Yeah.
Because maybe this time, the way something's done is actually going to work, but you've just been burned by that particular thing. And that's kind of how I felt about the internet money aspect of it. But for various reasons, I got excited. And from I guess from my vantage point, I was looking at things like how did consumer internet develop, and there seemed to be a lot of parallels. Most of my career, I've made money in two conditions and lost a lot of money in the third condition. Where I make money is when I find a space attractive and people are not excited about the space. They have very negative views of the space.
Yep.
And of course, I make money when I'm right and they're wrong, which isn't all the time. But when I make a lot of money, that's a really good place to be. People are negative and you're positive because you just have a different point of view. The other twin to that, and this would be, I think, crypto, is a space that's just neglected. It's not that people have a negative view, they have no view. And they don't really think they need to jump in or to look at it because they can't really understand why this would be an exciting area to invest. And that was really blockchain for, I would say, 2010 to 2020. Now, of course, you had the 13, 14 bubble and the 2017 bubble, but relatively it was still a very small space.
Yeah.
And in 2020, that started to change. A big part of that, I think, was because of NFTs put a spotlight where the global consumer base looked at it and said, oh, this is really cool. They could finally understand why their friends were talking about it. But right now, you can't say that crypto is neglected anymore, right? But you probably could say right now it's slightly out of favor relative to, let's say, the stock market. And so if somebody was thinking of deploying capital in crypto, now wouldn't necessarily be a bad time. You might have views that it's going to be kind of moving into trading range for a long time, whatever. But the best time to invest is when the markets have retreated. That's almost always been the case. Now, the question, of course, is, well, William, are they going to retreat even more? And I don't know the answer to that.
Yep.
But this is also why I'll just mention before I stop here, most people I would advise not to just hear about something and invest in it. I think that's a bad idea. I think what you should do is you hear about it and then you should start evaluating it. Give yourself some time to understand what it is you're looking at. And you can easily do this with a stock. After a few months of looking at a stock, you're going to start getting a sense of where there's resistance in the price, where there looks like good opportunities. You're going to start to get a feel for that. Someone who's not in crypto today, I'd say this is a great time to be starting to pay attention. And then you have to ultimately set a price at which you want to get in. That's up to you. You got to, and when it hits that price, don't hesitate, right? That I've seen this so many times throughout my life where people are like, wow, I wish I could have bought it at last year's price. And lo and behold, it hits last year's price because of some setback. And then they're like, well, I want it to drop a little bit more, right? You got to set a price and then say, now I'm going to get in.
You said something really interesting about, I think it's very, it's an underrated comment for investors and entrepreneurs. So I come from professional tennis. They teach you focus and attitude and tunnel vision and discipline. And so I took that to building online businesses in 2007 when it was same thing. It was not in favor, right? I mean, my parents were very much. Now everyone wants to be an entrepreneur online, but in 2007 there were no hoodie entrepreneurs, right? It was before Facebook. It was pre-social media. It was a big a relative, but it was a risk. Today, it's much easier to start a website or anything. And so you said something interesting. I think many people forget this, that you can be the idea of being scarred as an entrepreneur and investor. So I have studied Buffett and Munger since I was a teenager. And so their views on crypto very much played against why I didn't jump into crypto earlier. So it helped me a lot in Web 2, building solid, robust businesses that I sold and some that I still have in my portfolio. But my point is, you can use good ideas from an investor. In this case, Munger is notorious or famous for talking about how much he hated crypto, and Buffett, of course, never really understood tech, and then even blockchain, even less. But then it can actually play against you because you push that away. So I think that was a very interesting comment of
can I just explain?
Of course.
I'd like to explain a profound mistake you made, right? And it's good that you made it because you're clearly a young guy. It's fine to make it when you're young. You just don't want to make this when you get older. And here's the mistake you made. You took some advice or an opinion and put great weight to it when the person giving you that opinion had no credibility whatsoever in what they were speaking about. That was the problem. Throughout my 13 years now in crypto, this has happened so many times where people have come to me and said, hey, William, maybe I bought some Ethereum, right? I helped a lot of people with that back in the day. I bought some Ethereum. I'm really happy, but I'm going to get out. And I'm like, okay, and maybe at this time it was trading at $2 or something, $3. And I would always ask, so why don't you want to hold it anymore? And nearly always, it's probably always, but there might have been one time where it wasn't. It had nothing to do with their point of view. They were reacting to something someone told them, usually someone in the money management business. So these are guys who are like, my stockbroker or my friend, the investment analyst, said it's a bad thing. And I would listen and I would always ask, what expertise does that person have in this area? I mean, I am curious. What expertise?
Absolutely. Yeah.
And usually the answer was, well, I don't think they know much. And I'm like,
Yeah.
but why would you listen to me telling you about some medical therapy? I
Yeah.
hope not. And so you are right. You mentioned that Munger and Buffett has just famously missed the greatest sector rotation in history,
Yeah.
which was rotating into tech. And they had an outdated view, a terribly outdated view on one access point, and that was competitive differentiation. In their minds, and I think this is a result of where, how old they were, they thought of tech as cheap Japanese made radios or, eventually Chinese made products. A lot of electronics in the 60s and 70s were coming from Japan, and there really wasn't any competitive barrier. These companies were just putting together a bunch of components that they didn't make and then selling these products. They never updated their view. The idea now of what we know of as network effects, none of that really. And of course, since I was a tech investor for 3 decades, especially in the 90s, I also respected those guys. I would listen to them and I would think, wow, they're it seems like they've never bothered to understand why these businesses are growing so fast. And once you get lodged into a certain customer's or vendor's products, like you become a Microsoft or an IBM or whatever customer, it's really hard to migrate away.
I mean, exactly. I agree 100% with everything here. I think that, especially when you have advice that, in this case, I've never met either of them. I would have loved to meet Munger because he's had a big impact in my literally in the direct success of my Web2 business, in businesses in general. But like literally, there was some hiring concepts and operations concept that have done very well. And then one thing is, I'm glad, I'm very happy that you say I'm young. I'm actually probably older than you think I am. But I've learned a lot of just being curious, and that lesson of missing crypto in the 2013, 14, 15 wave, because I had this focus, which served me very well in other businesses, but just missing this because I wasn't curious enough, is something I tell our teams, like, oh, this new NFT thing, this new meme coin thing. For example, the memes last year. The amount of money that has flown through these memes is something that if you're not curious and open to looking and trying to understand why are these people trading billions of dollars worth of memes, it's also akin to missing the NFT craze in 2020 and 21. So, no, I think you really hit the nail on the head with it, and that's the difficulty of being an investor and entrepreneur, sticking to some known points that have served you well, while also staying open to what else am I missing.
And as you get older, that becomes so hard. I've lived long enough now where rules that I etched in stone, I've had to break. That was very hard. And yet any rule is almost always going to need to be updated at some point. And, there are some that I still follow, and the Charlie Munger and Warren Buffett, they were the ones who taught me that I have no business buying a stock unless I've done 2 things. I've thought deeply about at what price am I getting a good deal, and at what price should I be willing, if not to sell out completely, at least reduce some of my exposure to that asset. That is something I've carried with me forever, because the idea to me of buying something and having no opinion about whether the price you're getting is good or bad is a very risky thing to do. And that would have been NVIDIA as a good example last year,
Yeah.
where, you know, by most indicators, it seemed fully priced. It's probably not a great place to put your money at that point.
Yeah. What's your view? Speaking of that, actually, what's your view on maybe some of the views actually that have changed for you when it comes to crypto? Because you've been in the game a long time. What have you seen? How have your opinions changed over time? Something that literally you believed a few years ago or 10 years ago that has changed now?
Well, probably the biggest one was using my experience in consumer internet.
Mm.
My sense was it would take about 5 years from when I got in the mid 90s.
Yep.
It took about 5 years, 2000s-ish. Now that is when the market crashed, but it crashed for investors. It didn't crash for users. Users kept using and growing in the internet. The investors were just oblivious to it. But I was working off of, that was a major new innovation.
Yep.
Had no real comparison to anything else the consumer mass market was used to. It took 5 years or so, and I thought, okay, that's what crypto is going to take to go, quote, mass market. And well, it never did, right? And we're now 15 years in. So maybe about 2018, 2019, I had to say, all right, where did we come out wrong? And then that led me to now looking at blockchain and crypto from a completely different standpoint, not like thinking of it as something that all consumers were going to be engaging with at some point. I think that viewpoint prevails today, by the way. It prevails today. There's a lot of people who talk about, you know, this event, whatever that might be, is going to propel crypto into mass market. And I just don't think it's that type of platform. It will be maybe more like AI, right? It will be ubiquitous, but invisible to a lot of people. And that is going to therefore kind of drive where you're going to put your investment capital as you think about what is going to be the most useful things for people with respect to blockchain.
Yep. Talking about something that's useful is, of course, your you know, what you co-founded, so Tether. Very curious to hear your thoughts on stable coins, and you talked about infrastructure. So tell us more about you know, your thinking points on that and how you see the market now.
Sure. So we can talk about the origins of it, but let's first just talk about why it exists. At the end of the day, the vast majority of transactions, of people's interaction with crypto, is on centralized exchanges. And if you are a trader, the only way to calculate your profit from a trade is for one side of the trading pair to be stable. If both sides are moving, it's kind of a theory as to whether you made money or not, right?
Yeah.
And so maybe a lot of your audience doesn't know, but the you know, before Tether became really popular, which was maybe post 2017, the biggest trading pairs was usually against BTC.
Yeah.
And as soon as exchanges started listing Tether a lot more, it rapidly became the dominant trading pair. I would suspect it's 70% of all of the, no, 95% actually, 95% of the top trading pairs of any listed token, 95% are going to be against Tether, because you need you know, a stable unit in order to calculate your profit and loss, and the vast majority of trading is done in an attempt to arbitrage. And so Tether or any stable coin makes complete sense. This is why the most traded crypto on earth is Tether and it's not Bitcoin, because it trades against all cryptos. And I also believe, and this has taken longer than I thought it would, but maybe once you're a sort of a zealot about something, you think everybody else should see what you see. But in 2015, I thought by 2030, the majority of the world's giant economies would have tokenized their currency. And I thought that because once you see the advantages of a tokenized currency, it's one of the rare innovations that has no downside. That's quite rare, right? There's only a few where it's only positives. There are only positives to tokenizing your fiat. And a few years ago, even the U.S. Federal Reserve was saying, yeah, this makes sense. We should be doing this. But what happened is they hit a lot of resistance from basically consumers, from the population, who have a lot of fear that what they call a central bank digital currency would lead to a lot of control over how people spend money and whether or not they have access to money. Now, I find that humorous, by the way, but I've been in the payment space since the late 90s. My partner and I were the first ones to invest in PayPal. So we've been in the payment space a long time. The notion that you think because you don't have a central bank digital currency, the US government has no way to monitor or even to restrict how you use your money is naive. The amount of information that financial institutions send to the US government that gives them every single iota of information about what you're doing with your money and how much you have, and they can, with the snap of a fingers, freeze your assets. You know, if that's your worry about central bank digital currencies, you should.
They do it every day. They do it every day anyway.
They do it every day, right? Every day. I mean, the worst piece of legislation in my lifetime was the Patriot Act. And the Patriot Act, any piece of legislation that is rushed, I've learned is shit. Any piece of legislation. And that was it. It was like, you got to be behind us because this is to get the terrorists. But of course, that turned out to only be a tiny aspect of it. What it really did is it created this giant bureaucracy to track everything you do legally with your money. And so I still think that tokenized currency is where all major economies will go, but now it's going to take longer because of the reticence some people have about it.
Do you think it's a branding problem, literally a PR problem?
I would call it's a perception problem, if you want to call that. It's not really a branding problem. There's, you know, the internet is great for disseminating information, but it can also disseminate rumor and silly theories. There was, especially a couple of years ago, there was this strong narrative on the internet that a central bank digital currency, so a tokenized fiat, was associated with the devil, you know, and just
there's so many of those.
Totalitarianism, and again, naive because you already have restrictions on your money that you may not be aware of, but there are many. So I guess I would just call it perception. And of course, also one of the biggest problems is the world is about trade-offs. We all make decisions and there's trade-offs. I would say the Federal Reserve and then other people who were proponents of tokenizing fiat were not very effective, or even ignored what the benefits were to the consumer or to the business. And the benefits are massive, but they weren't being articulated. And probably the most depressing episode of that was a few years ago when Mark Zuckerberg, the founder of Meta, went before Congress to defend his soon to come stablecoin called Libra. And I knew watching him get grilled by the members of Congress, and this was frustrating. So this was the first time there was a spokesperson for a stablecoin in front of Congress. And what was depressing about it is Zuckerberg knew nothing about Libra. It was so obvious that maybe a few days before his testimony, he got a briefing doc. The guy was all about, at that time, the metaverse, as you remember. Payments has never been an area he cared about. And so he did a horrible job selling the American people and members of Congress on why this was such a good idea. And no one has really come around since to do that.
Who can do it? What would it take to... Is it again a perception thing? Yes, but what would it take to make it more mainstream today?
Well, by the way, I remember doing a YouTube video after it where I think I said in 5 minutes, this is what I wish Mark Zuckerberg had said, right? This is, I wish he hadn't been the guy who was, excuse me, the face of stablecoin. Many people could do it now. The way I would do it, if I had a platform, I would speak to businesses that engage in global trade, because the greatest benefit of a stablecoin is in cross-border transactions. Once the businesses that get behind it, they're going to lobby for it. Most businesses, I talk to people who run companies, I talk to them every week, and inevitably we get to, crypto and stablecoins. And I would say the level of understanding of it is incredibly low. And it's not surprising, because of all the areas of technology that VCs invest in, that businesses use, that consumers use, I would say the distance between comprehension of how it really works and just complete ignorance. I mean, it's like this, like that. Very, very few people understand the intricacies of payments. And now I've been doing this for 25 years. So I was forced to do it. And every time I went into a layer, I realized there was another layer below it. It's the number of middlemen that are used to allow you to pay somebody either domestically or outside the US. It's crazy how many hands that transaction touches, and each of them, a few pennies stick to their hands as they move the money along. And that's why there is so much upside in having a single layer, which would be a blockchain layer, and a stable coin as the unit of payment. To this day, there is no way to clear a cross-border transaction in a day. You may think that somebody sent you money from Germany and you're in the US. You may think you got it instantly. That you did not get that instantly. You could even argue you never got it, but your ability to do something with that money is going to take multiple days. Think about that, because of the risks that maybe that transaction is going to be unwound, or you weren't the intended recipient or whatever. Think about that versus all of your audience who understand the way cryptos work. Near instant ability to use it without fear of that transaction being unwound to many businesses and to the global financial network. That's a super attractive trait.
Yeah, I'll tell you two stories. So one, right before the show, so this morning I get an email from someone, and he's like, "Hey, I tried to reach you. There's some payments that we need to discuss that I'd like to discuss about one of your accounts." So this is a bank that we bank with. Everyone knows the name. They've been, I'd say, notoriously anti-crypto for the last few years, and we have some transactions from a centralized exchange to pay some of the employees that we have, and of course now we need to answer questions on why there are these transactions from an exchange to a very well-known bank. So I'm looking forward to having to talk to them about explaining that to them. That's one thing, and I just got the list of questions about an hour before starting the show today. I said, no, just send the questions. We'll have a look. That's one
Right.
thing. And you
Is
know
that a
how
US
the
bank?
bank, how bad it's been.
Is that a US bank?
US Bank, yes.
Yeah. And so you're probably going to deal with someone in compliance, or you're going
Compliance,
to deal with
typical
somebody who's
questions.
interfacing with compliance.
Yeah.
And it's kind of like responding to a deposition. They're asking you
Yes.
seemingly innocent questions, but there's a lot behind those. And sadly and annoyingly, there's a lot of embedded assumptions that are simply not true, but they carry with them. The BSA, the Bank Secrecy Act,
Yeah.
is the regulatory template that U.S. banks use to restrict the usage of crypto. And it's really annoying. There's no law against you buying and selling crypto. In fact, our
Yeah.
president thinks it's a great idea, but the banking networks absolutely hate it. And
Yeah.
of course, anyone who's been in crypto long enough has had their bank accounts canceled, closed.
Yeah. Yeah.
And they never give you a reason, but the reason is because they don't like that you do stuff in crypto.
Yeah. Yeah. Exactly. And the other story was, so in 2013, I was in Brazil. I lived in Brazil for about 7, 8 months, setting up an e-commerce company. And so the biggest problem we had in Brazil with my partner co-founder in Brazil was not shipping, was not products, it was banking. So at the time, now of course Brazil is one of the biggest crypto countries. At the time, we spent tens of thousands of dollars going through law firms on Avenue Paulista in Sao Paulo, talking to the best lawyers to structure to build a structure of companies in Brazil to do cross-border remittances, right? Because we would get funds from other countries, shipped to and from Brazil. A nightmare, a nightmare. And so, of course, anything stablecoin would have been amazing at the time.
Yeah. When I would talk to CFOs, if I would be investing in a new crypto company, early on, every employee coming on board was new to crypto because crypto was new. And when the CFOs would say, like, what is the most important thing that I can do? And I would say, get a bank account. They would almost always go like, oh yeah, I have no problem opening bank accounts. And I'm like, no, you're going to see.
Yeah,
like,
you'll see.
And then this is why what we wound up doing, if you've been in this business for a while, you started to have to pick banks that were willing to work with you.
Yeah.
What's frustrating is those banks tended to be smaller banks. Those banks tended to not have the technology that you and I would like to have access to as we work with our businesses. And this problem still exists. The biggest banks that have the best tech are still shy about doing things related to crypto.
Yeah. What are you the most bullish or interested in the market right now? What is something that you like doing in crypto, and what is something that you think people are undervaluing today in crypto?
There's many things that fit that. I would say two things that I have a particular interest in is because of my background with the video game industry, blockchain-based video gaming ideas. There are so many capabilities the blockchain gives you to incorporate into video games. So now video gamers tend to be very stuck to a way that they do things. So when you introduce something new, Think about the decades it took for virtual items to come about, right? It took a long time for people to get comfortable with that. But so blockchain-based gaming, particularly in Asia, where they're strong game people, and then DeFi as a broader category. I think you need DeFi is basically a three-legged stool. There's three elements you need for it to exist. First, you need a smart contract. Then you need a mechanism for creating leverage. And then you need a stablecoin. So you need all three of those, and you can do really fascinating things. Now, people hear leverage and they say, oh, leverage is terrible. It could be, but there's reasons to use it, and there are people who want to use it, and there is so the biggest lending market in the world, your audience may or may not know, is the repo market. If for those of you who maybe aren't on Wall Street, repos and reverse repos. So this market, I like to think of it as the pawn shop of global finance. You give to either someone at the bank or at the U.S. Federal Reserve or whatever central bank you work with. You give them a bucket of assets, tradable assets, and then they give you a short-term loan. Could be for a day, 2 days, 3 days, but it's generally short-term. In the U.S., we have perfected this market from a tax standpoint, from a legal and title standpoint. It's a really efficient way to get short-term liquidity in the market. And I think in many ways, crypto could be one level higher, because the whole point of the repo market, which is trillions, right? It's giant. The whole point of that market is assessing and acquiring title to collateral. And where blockchains and stablecoins and cryptos in general are exceptional is in the fact that they create what we call bearer instrument. And a bearer instrument in finance is he who holds the asset has the title. If you hold it, you are deemed to be the rightful owner. That's how crypto works, right? I send you a Bitcoin. I don't have to go and refer to a third party and say, that's mine still. No, you have it, you own it. When it comes to the ability to do short-term lending, and at attractive rates, the most important part of that is ensuring that you have proper title and custody of the collateral. And I don't believe there's any better way to do that than on a blockchain. So that's kind of my thinking around why DeFi is such a extraordinarily good area for existing financial institutions, legacy financial institutions, and new blockchain-based institutions to be developing.
Yeah, I think that this also plays very well into what's been happening over the last, I'd say, 18 to 24 months, which is really the first TradFi cycle, with the old firms and money funds coming into, for the first time, really en masse into the market. Yeah,
and part of that is going to be
shape. Go ahead. I'm
part
very
of that's going to be because you have securitized crypto now with Bitcoin and Ethereum ETFs, and so those securities are part of the traditional financial system, and therefore now you can do things with those. And there are things I wish they wouldn't do, right? But they can do things with those that is starting to pull in the traditional, very big trade finance institutions. And it's going to take time because, as I alluded to earlier, blockchain is so different from internet in one particular respect, and that is the internet was, once you got some baseline understanding of what you were doing, you were talking to servers who had files in remote locations, you kind of started to get an idea of why it was useful. Well, I think blockchain isn't even a technology, right? So blockchain is a methodology. It's a methodology for acquiring and storing and safely retrieving information. So it's pitched as a technology, and everybody sort of sells it that way, but it's really more of a philosophy of data storage. That's how I think about it. And maybe if we had started out that way, people's comprehension of it would have been faster. But because we started out with, there's a thing you can use to buy stuff, you buy some pizzas or whatever, because it started out as like a money substitute, I think the important aspect of blockchain has been missed. And now you have to unlearn that and kind of get taught through using it what its real value proposition is. And as I've said many times, there are only, that I can see, a few, maybe 5 things for which blockchain is exceptional. Virtually anything in the world you can do, you would probably want to do without a blockchain. But there's a few things for which it has no equal. And you remember the 2017 ICO bubble. There was almost an infinite number of permutations of here's how you can use the blockchain. That led to great confusion. I remember talking to big businesses, and they were saying what they were going to use the Ethereum blockchain for or some other blockchain. And I would say, that's a terrible use case. But they had to sort of get in it and use it. And that learning is one of those surprises I've had, how long it's taken.
What do you think is the next onboarding mechanism, onboarding opportunity to grow crypto as a whole across the world? Because it's not a new asset anymore. But what's your view on that?
No, it will almost certainly be stablecoins. I think every major financial institution, whether or not central banks issue their own digital currency, every major financial institution, once they kind of see the light, they go, Jesus Christ, this is like the best thing ever. I mean, what Mark Zuckerberg wanted to do was exactly what I would have done had I controlled Facebook back when he was pitching or trying to do Libra. The notion you have 2.5 billion people connected to your platform in 100 different countries with 100 different currencies, and many of those people want to conduct commerce with each other. I mean, it was such an obvious thing that he should have a payment layer. But as you've seen, he even bought WhatsApp, right? And messaging and payments, the Chinese merged.
I was going to say the Chinese, it's not new.
15 years ago, right? They were like, oh, wow, Alipay, you know, that makes sense. So it took, for some reason, it's not been a focus point for Facebook, and that's probably to the benefit of entrepreneurs and other businesses that want to use stablecoins. But I think in 10 years, for sure, everybody, maybe they're not aware of it, but they will be transacting in stablecoins.
Yeah, I agree. What are you, so we have about 10 minutes. What are you working on? What do you do on a daily basis? How do you split your time through? I know you do a lot. What gets your attention and your time nowadays?
So, you know, as an investor, I constantly hear pitches or ideas from various people, either people I've worked with in the past or existing companies, or just entrepreneurs who reach out to me and say, I'm thinking of doing this. Obviously, most things don't hit my my bullseye in terms of where I think blockchains should be focused and where there's opportunity. So that's a reasonable part of my day, as is diving into the video game world and what new stuff's coming out of that. The video game world, has a lot of new stuff, but also they're very there's a lot of dogma about what's allowed and not allowed. There's two camps, hey, blockchain might have a place and never ever blockchain, right? But there's a couple of billion people globally who use video games. It's the largest category by number of people, the largest consumer category by an order of magnitude. Almost everybody who has a smartphone or a computer connection does gaming. And so I really like to spend time figuring out and advancing the gaming stuff that I'm working on. And then some time spent on the evolving regulatory landscape, which countries seem to be moving forward, which countries are stalled. If you were involved in crypto from like 2010, 11, 12 till now, you would have seen countries ignore it, ban it, promote it, ban it again, and issue licenses and so on. And so right now, there's Congress is looking at it. It's not the priority; it never has been. But the U.S. Congress is looking at they're looking at the stablecoin part of it. Like, all right, let's at least give some guidelines as to a stablecoin that's allowed in the U.S. should have the following characteristics to be legal, right? So there's some stuff, so I would say that's the main stuff. Obviously, I do look at the stock market as well, and because probably unfortunately, and I was probably more of a minority voice back in 2016, 17, when a lot of people were excited about the traditional finance markets starting to pay attention to crypto and maybe even starting to develop products for it. I never liked that. I still don't like it. And the reason is because the traditional traders on Wall Street, their sense of how they make money is like pennies, right?
Yes.
They want to make, they want to reliably make a few pennies on each transaction. And so they sort of lock in assets at certain prices. And they also, of course, have the ability to short things. And keep in mind, up until December 2017, there was no institutional way to short Bitcoin. The only way you could do it was with like a little bilateral contract with somebody else. But that had a lot of counterparty risk. So, and then the CME launched futures, and to everybody's cheer in December 2017, and my view was, wow, you're going to see what happens from that. It wasn't the only reason, but one of the things you saw was Bitcoin dropped by 80% in the following year. And so I also think Wall Street doesn't really appreciate, or let's say care about the utility that you can extract from blockchains. I don't think they care about the tech at all. No different than, do they really care about AI? No, they care about investing in a company that is going to be in that space and can make a lot of money. It's the same way with blockchain. And so we've seen, I looked right after Trump's inauguration in January, you see Bitcoin went up, for a few days, whatever. And then it has almost perfectly matched the correlation of the US stock market, of the S&P 500. In fact, it's actually dropped it's moved in the same direction, but declined to a greater amount than the S&P 500. And if you think a lot of that decline is as a result of tariff risks, what the hell does Bitcoin have to do with tariffs? Bitcoin's not going to be a tariffed asset. So it just goes to show Wall Street looks at Bitcoin as a risk asset, a tradable unit of risk. And during times of market volatility, Wall Street institutions reduce their exposure to high risk assets and go to what they think is safe. And so here you have something that should actually be doing well in a time of global uncertainty because it's not centrally controlled, but in fact is doing worse than traditionally traded assets. That's all a result of the coupling of the global financial markets and crypto. I would actually like to see it break at some point.
Do you think it will break? Because the decoupling has been discussed for years now. What's your view on that?
You think the decoupling has been discussed?
Yes. Will we see it? Because it hasn't happened.
I think not. I think it will be cyclical. Right now, it's kind of like as my job as a venture capitalist, the way I got liquidity generally was through IPOs. The IPO window was uncertain and very short. You never knew when it was going to open. And when it opened, you probably had 9 months from start to finish. That's about the average amount of time the IPO window is open. That's because that's around the amount of time there's, if not euphoria, then just high optimism, right? That's the only time the IPO market works. People have to be excited about some unproven thing. And in any kind of risky market, even quality companies don't go out. What's the one I heard? I think StubHub was going to go public, and it canceled its IPO, and I forget the other one. There was another fairly big company recently that had to scrub its IPO. So when you have companies that have been around 10 years plus, have a lot of revenue, a lot of customers, kind of in some respects a lower risk company. When the door is shut for those, I would say, crypto, Wall Street people think of crypto and Bitcoin probably in the same way they think of IPO stocks. Like they're in this high risk bucket. And as soon as the markets get frothy or get that volatile, they dump it. And so we get this strange thing. We used to tout Bitcoin as this asset uncorrelated to traditional markets. And now it's correlated and magnified. And so what you might see is Wall Street really gets out of it to a great degree, and therefore the prices is moved more by the core crypto holders. But I think as soon as the markets stabilize and get positive again, Wall Street people would rotate back in because they're always looking for in optimistic markets, they want assets that can do better than like traditional assets, and that would be something like Bitcoin. So I think we're stuck with them.
No, I mean, yes, it's very well put, very well explained. And I think I talk about this a lot on the show too. Anyone who's in crypto would gain a lot from looking outside of crypto and looking at traditional finance and studying markets, because crypto is a small, minuscule bubble in the grand scheme of things. That's, that rebounds and is completely dependent on, again, tariffs or the macro.
And the other reason you would want to do that, if you're a young person especially, is each industry behaves a certain way and has a certain type. It attracts a certain type of investors. And that's useful to know, but in order to really learn about how investing works and maybe to take advantage of the next thing, you've got to broaden your horizons. So, over 4 decades, I've done real estate. I've obviously done tech stocks. I've done energy stocks. I've done video gaming, a very focused vertical that was neglected for many, many, many years. It was a very niche market. But that niche market in video gaming prepared me so well for another niche market that was also global called crypto.
Yeah.
So you want to broaden your outlook, and what's really cool is when you can bring insights that you've acquired from one particular sector that you've gone deep in to another. You should always be looking you should be standing on the tangent of your market and just looking, what else am I touching? Because, that gives you insight into things. And the rarest element in the universe is deep insight. Deep insight will make you unbelievably rich if you act on it. And I believe deep insight comes from two things. First, it comes from having a framework that maybe you acquired from doing something well in one area. And then you mentioned curiosity earlier. Having deep curiosity, and when something strikes you as fascinating, you dive into it. I don't think you can have insight being on the kind of on the fence. I've never believed that, you have a eureka moment about an industry that you know very little about. It could happen, but it would be quite random. As a VC over many, many, many decades, people who came to me with ideas that were excellent ideas, nearly always those ideas originated from some deep insight they acquired by looking at something for a fair amount of time and seeing something that maybe the insiders didn't. But you got to be disciplined. You got to be focused. Obviously, one of the great challenges of our society, I face it as much as anybody else, is attention. Right? It's so hard to stay focused when there's so much grabbing our attention. And when I talk to my younger people who work with me, I try to give them this encouragement. You got to turn off a lot of stuff. And just try to focus on the thing that matters.
It's funny, in the early 2000s, I was building websites, right? So there wasn't YouTube, so you had to learn. I picked up programming by reading the For Dummies books, and so I would sit,
those were good.
It was great. No WhatsApp, no YouTube, no Twitter, nothing. And you would, be on the computer, look at the book, codes, and see, and there were no interruptions. It's something that this new generation, the Gen Z generation, will never understand, the calmness of just being in front of the computer and doing what now is called deep work, which before was called normal work.
Right.
It's really evolved.
Right. It's you could obviously have a whole podcast on this subject. And I look to others who have maybe figured out some techniques. I look to them. I'm constantly thinking about the fact that I used to sit for 12 hours, when I was at Disney back in the 80s, and I would build a model for inventory management for the Disney store retail chain. And I would be focused, take a couple of breaks. That seems an impossibility now. Obviously I was, before this program today, I was on a phone, texting with a couple of people, and they were both in transit, right? One was traveling in a train and one was in a plane. And I'm like, wow, yeah, those used to be, contemplative times where you, maybe you read the newspaper or you read some report, and now, it's, as investors, man, I can't emphasize that enough for people. Even if it's just, hey, I'm going to, 1 hour each day is I'm drilling down on why I like this particular investment. And then, of course, another very, very helpful thing is to talk to other people who are smart to bounce those ideas off.
Yep.
I've never been a solo guy. I've always had people around me that I can use as sounding boards. And I would encourage your guys, if they're in crypto and investing, to do the same.
Yep. Yeah. No, this is great. We definitely want to have you back on, because we talk about like non-crypto, but like more business and life stuff in general. One last question before we wrap up. Video games. I grew up with video games, loved video games. My quote first job was actually reviewing video games for a magazine in Switzerland in French.
Oh.
Loved it, because my dad, as a parent, it was very difficult. It's always difficult. Like I don't have kids yet, but you see and I was lucky to be, school was easy for me. So I had a lot of time aside from tennis. It was video games. And so one day my dad said, you might as well make money with this. So he connected me with someone who was looking for, the editor of a video game magazine. Long story short, my PS1 was my first, console, the Nintendo 64. My question to you is, when it comes to crypto, do you think that it will be, this is a debate I have with my video game friends all the time. Do you think it will be a video game studio that goes crypto first, that really wins, the big first move win? Is it going to be a Nintendo or an EA that wins in crypto, or is it going to be a Web3 studio that wins in video games?
Right. Two things. First, stop giving me really easy questions, because that's an easy question I'll give you the answer to. And secondly, probably in the notes section of this video, you'll want to describe to your listeners what a magazine is. They may never have seen one. Yeah. So
with the CD, remember the video CDs, like the demos, like they would give you like a level for free.
So yeah. I mean, I spent hours at the. There was a place called Crown Books, and then Barnes and Noble, where they had huge magazine racks. And the idea that I could read all the magazines and not pay for them was wild.
Yeah.
So, to your question, who is going to bring the big breakthrough innovation to blockchain-based video gaming first? Is it going to be an established big video gaming company, or is it going to be an upstart? It's going to be the upstart. Why do I know that? Because of the patterns I've seen throughout my investment life. When a new innovation's introduced, it's somebody, maybe someone in your audience I'll enjoy. They'll mention in the comments where that's happened. In all of the major ones, it has always been developed organically by a new group of people. And in fact, the video gaming industry, I've done a lecture on this, is a case study in itself. You had initially, board type games, and then eventually somebody came along when the electronics revolution started in the 70s, and they said, hey, we could maybe use these transistors and computers to create arcades with big electronic games, and games like Space Invaders, and other fun games that you fed the quarter into. Those guys, names like Midway, those guys then saw the PC revolution come, and they were like, those aren't real games. Our stuff's real game. By the way, the Midways and the guys who did the big arcade games, the people who were doing board games, Hasbro and Milton Bradley, were like, those aren't real games. And then the PC guys said, well, just wait and see, look what happens. And then console guys come along, and what do the PC gamers say? Those aren't real games. And then you had the browser-based games, Flash-based games, right, in the 90s. And everyone agreed, who had been a platform before, those aren't games. And then you get early handheld games. And companies like Jamdat that allowed you to, with a feature phone to play like a bowling game. And of course, everybody at the big gaming conferences said, those aren't real games. Real games don't exist on phones. Now that's funny, right? The biggest category of gaming globally now is mobile. And then you get to blockchain. And what did I hear when I went to all the gaming conferences in like 2017, 18, 19, you're not a real game company because those can't be games. So this is why I answer, it's going to be somebody who is not from an established game company that identifies a capability with blockchain that's going to create a new category of game. And I haven't seen it yet, but I am hopeful that we'll get there.
I still like the idea of an old video game player, industry leader coming out and finally understanding the benefits of crypto and blockchain, but they've had so much time. I think it's a lost cause. It's been very tough for them.
Yeah. But like I said, it's not just gaming. It's all sectors. Why didn't major banks adopt blockchain and develop stablecoins? I mean, why is it taking them 15 years? There is this element among W-2s, especially who are working in the big companies, that part of it is kind of a coping mechanism because they built their entire business around a technology infrastructure. And if somebody comes along that offers maybe better or cheaper capabilities, it's incredibly threatening. And the venture capital industry would not exist if big companies could look at an innovation and grab it and innovate with it. They wouldn't exist, but my industry wouldn't exist. It exists because generally, even if they know about the technology, they boycott it. They don't want to hear about it. I mean, the internet, virtually no major companies that existed prior to, call it 1995, in the introduction of the browser, the first commercial browser, the Netscape Navigator. Virtually no company that existed that was big before that is a dominant player in internet. It is all native companies.
Nothing to add. Netscape, that's something that many listening to this don't even know.
They took, by the way, it's one of the lessons I give entrepreneurs. They took the Mosaic browser, which was an early browser. And before there was a browser, guys, you just kind of used your keyboard to figure out where to go. There was a World Wide Web that was created in 1990 by Tim Berners-Lee, but it was an awkward way to move around the internet. And then Mark Andreessen took, with a few others, took the Mosaic browser, which was an open source browser, and just put a front end on it, called it Netscape, and made billions. And that tradition actually is held, right? The tradition of people taking open source software, putting a paint job on it. I mean, hello, Amazon and AWS. That's all Apache. An open source system, and created a multi-$100 billion business out of it. Something for your audience to think about. Like, there's a lot of very smart people who experiment and build stuff in the open source world, blockchain, and you can make a business out of that, because usually the open source guys take it down the field only so far, and then they get bored with it. But if you can pretty it up, make a good UI, and target it against a specific sector, you could do really well. And a lot of the heavy lifting was done before you had to try anything because of open source. Maybe AI will make that even easier.
There's a great movie about a new player entering an old industry, and it's the BlackBerry movie. Great movie. Very good movie.
Yeah.
Exactly what you just described. And they actually came up with a very, I mean, they innovated the whole space, and then they got completely outmaneuvered by.
It's such a fascinating thing, because not only were they early and first, they were there were BlackBerry zealots. I was one who
I was
I'm
one.
never
I had to
parting
buy
with.
like 5 bowls. I still have them.
Yeah. And to the speed at which the BlackBerry market collapsed is fascinating. That industry, Nokia, I want to say in 2000, Nokia wasn't BlackBerry, but Nokia in 2000, I want to say 5 or 6, had 50% of the global phone market by units shipped. 50%. Nokia no longer exists. This is why anyone who's young should understand that no matter how big the giant appears, it can be slayed. And generally, when that giant company goes down, it never recovers. Probably the greatest, from my vantage point, turnaround I've seen in my lifetime would have to be Microsoft. In the year 2000, Microsoft was the largest market cap company in the world. It had a $650 billion market cap. Number 2 was Cisco. Then Bill Gates stepped down, and Steve, I'm blanking on his last name. Ballmer. Steve Ballmer, who was his sort of co-founder, stepped in, and Ballmer was a sales guy, not an innovator, just dismissed everything related to internet. And what was that, like 12 years? Microsoft was a dog for like 12 freaking years, and people thought it was dead. And then in 2014, they started making some changes, got a new CEO, and now, of course, one of the top 3 most valuable companies. But that's the rare exception. Usually, when a new technology comes around or new business model, the incumbents collapse.
Thank you for coming on to the show. Any last words? Any closing conclusion arguments or anything you want to?
I would say this: it's more an observation as opposed to a definitive statement. This 2025 was supposed to be the post halving, happened in April 2024. The post halving bull market for Bitcoin, and all altcoins follow Bitcoin, was supposed to happen in 2025. By looking at patterns, even through December of 2024, it looked like we were on this trajectory to have a nice bull market. But that required, from my reading of historical patterns, that required Bitcoin to be about $200,000 by end of April. And it's not end of April, but it doesn't look like it's going to get there. And so the thing that I'm noodling over is the 2025 bull market canceled? Does it get moved for whatever reason into 2026? And just as important, after a bull market, you have a painful retrenchment. We've had every time 70 to 90% retrenchment. Will we not get the bull market, but get the retrenchment in 2026? You hope not, but this is, as a result of this great uncertainty, we no longer can be lazy and rely on this free pattern. There's going to be a lot of money made, because if you are right, you are going to be able to acquire crypto at very attractive prices. But what the right direction is, I don't know. But I think that's to be figured out over the next 3 or 4 months.
We'd love to have you back, probably summer, exactly 3 to 4 months from now, to talk about that, because
July.
I think that's going to be.
If July there's no bull market, we have to rejigger portfolios. So we can meet in July.
Absolutely. And unfortunately, July is never extremely bullish.
I know. I know. And
That's the
August
issue.
always has bad surprises.
That's the issue. We should definitely have you on July or August for sure. This has been a
Yeah.
pleasure. We will link everything so people can find you easily. Any projects that you'd like to mention. It's been great to have you on, and we've gone longer than expected. But again, we could take this conversation in 10 different directions. We'll do it
Pretty
next time
much.
for sure. Yeah, it was
Yeah.
a pleasure.
Good
Thank you,
talking to you.
everyone. Thank you, William. This was the CoinRock Show, and we love to bring you very interesting guests way beyond crypto. Of course, we always want a connection to crypto, but again, we talked about video games and life and focus. Thank you for being here, and we will see you next time. Thank you, everyone. Hey, thanks for watching. If you got value from this episode, you're going to love what's coming next. So subscribe now. We drop new episodes and videos several times a week featuring power players, market movers, and insiders from the financial world. And if you want access to deals and insights we only share privately, hit the links in the description and we'll see you on the next show.